The headlines are divided. Some people say it's the next revolution. Others argue it's a bubble about to burst. The noise is overwhelming, fear is spreading, and the truth is harder to see. So here's the question no one is answering. If AI is really about to crash, why are some of the smartest investors in the world doing the opposite of the crowd? Why is money still pouring in while the headlines urge everyone to leave? Most people are picking up the wrong signals. They listen to the loudest voices instead of the smartest ones. And when things get unstable, they become paralyzed. This video isn't meant for investors who need cheering on. It's for investors who want to understand how real money moves when the market gets chaotic. We will explain what's really happening in AI, then we'll determine what you should do with your money when the fear takes over. Because whether you like it or not, the AI crash story is everywhere, and you need to know why it's wrong. Every cycle needs a villain, and this time it's AI. The story goes like this. Valuations are high, demand is fake, and companies are inflating numbers through circular deals that only appear to show growth. Skeptics say it's 1999 all over again. They point to Michael Burry. They point to multiples. They warn you to sell before everything falls apart. But here's what they ignore. The companies building this infrastructure aren't following a trend. They're securing future supply. They're generating revenue at scale that doesn't happen during hype cycles. And they're creating something with a longer lifespan than social media or cloud ever had. This isn't speculation, it's execution. There's high demand, high margins, and a large backlog. You don't see that when a sector is falling apart. You don't find sold-out product pipelines and infrastructure deals when there's no real demand. Yet that's exactly what's happening behind the scenes. The bubble story only holds if no one is buying, but real capital is still pouring in. Every investor says the same thing when times are good. They say they'll buy the dip. They say they're sitting on cash, waiting for opportunity. They watch documentaries about bear markets and pretend they're ready to go full predator the second blood hits the street. Then the VIX hits 30 and the whole plan goes out the window. Their hands start shaking, their watch list starts shrinking, their mouth gets quiet, and their cash, it doesn't move. They start talking about waiting for confirmation or monitoring macro risk. This is when your balls are supposed to drop. But for most investors, it's a cold water plunge, turtle effect, balls nowhere in sight. But here's the truth no one wants to say. Both camps are valid. If you're by the calm, you stay mostly invested. You stack high-quality, cash flow-rich companies with a moat and let time do the work. You don't try to call bottoms. You don't chase spikes. You just stay in the game. If you're by the fear, you're waiting for volatility. And when it shows up, you strike. You don't hesitate. You don't wait for CNBC to bless the move. You've already done the work. You've got your watch list. You've got your rules. When the VIX hits 30 or higher, you deploy. Both strategies are valid, but they collapse the second you second guess them. So stop pretending you're one when you're actually the other. That's how people get wrecked. So how much cash should you really hold? Most investors hold either too much cash or not enough, rarely the right amount. Why? Because they're guessing. They've got no system, no range, no signal, just a feeling. Let me give you something better. Right now, the VIX is at 23, which means market volatility is elevated, but not in full panic mode. Fear is building, and we can measure it. CNN's Fear and Greed Index is sitting at 11, deep in the extreme fear territory. The last time it was this low was during sharp market pullbacks. 1 year ago, the reading was 56, greed. Today, people are running scared. So how do you manage cash in this kind of market? There are two paths. If you're by the calm, you stay mostly invested. Your edge is time in the market. In normal volatility, you hold 5 to 10% in cash, just enough to rebalance or rotate, but not so much that you're stuck waiting on the sidelines. If you're by the fear, your whole strategy depends on moments like this. You want liquidity, watch for elevated VIX levels, and when it crosses 30 or higher, that's your signal. Deploy, go hunting, lock in discounts while the crowd runs away. And that's why this matters. These aren't just sentiment scores and volatility indexes. They're signals that tell you when to act. And if you don't have a framework, you're just another investor reacting to emotion. Cash should be tactical, not emotional, anchored to market conditions, not your gut. Why this is still a smart time to be in AI. If this were a bubble, demand would be collapsing. Prices would be outpacing execution, but that's not what's happening. What we're seeing is the opposite. Infrastructure is growing, supply chains are stretched, hardware isn't sitting on shelves, it's backordered. Capital isn't leaving, it's flowing in. This isn't a hype cycle, it's a race. The difference this time is that the focus isn't on clicks or coins, it's on compute. That's the advantage. Companies that can build, scale, and deploy AI infrastructure faster than their competitors aren't following a trend. They're securing their position, and the market recognizes this. We're not looking at speculative companies betting on hope. We're looking at firms generating real revenue, selling real systems at real prices, with backlogs that extend into the next quarters. That's not a bubble, that's growth. So here's the question I want you to answer. Which investor are you? Are you the buy the calm, holding quality stocks with strong free cash flow, wide advantages, and real earnings? You're not concerned about a crash. You're ready to hold through the noise. Maybe you've trimmed some positions to secure profits and keep some cash ready, but your strategy is clear. Stay steady, stay focused, let the growth work. Or are you buy the fear? Patient, ready, and waiting for the spike. You don't panic when the VIX climbs, you lean in. The headlines may scream collapse, but you won't hesitate because that's the plan. You've been waiting for this. One strategy weathers the storm, the other seeks opportunity within it. Both need discipline. Just don't fool yourself about which one you are. Last week, I trimmed a few positions and secured some profits. Not because I'm afraid, because I want control. This is a volatile market, swinging back and forth without a clear direction. In this kind of environment, keeping some extra cash isn't a retreat, it's smart positioning. Right now, I'm not investing heavily. I'm observing. The VIX is at 23. That indicates rising fear, but it hasn't fully affected prices yet. So I'm watching and waiting, letting the volatility build pressure. When the VIX reaches 30, that's when I begin my search. I don't mean randomly picking stocks. I'm looking for high-quality companies with strong cash flow, pricing power, and a competitive advantage that becomes even stronger in tough times. That's where the opportunity lies. And one stock I like is Nvidia. Anyone can buy after a good day. That's not investing, that's seeking comfort. But when the VIX spikes, headlines turn negative, and the crowd begins to panic, that's where the hard work pays off. Because if you've positioned yourself well and know what type of investor you are, you don't have to guess. You just take action. Now let me ask you something. Who else is walking you through fear-based cash planning, volatility triggers, and actual cash deployment rules, while also showing you what conviction looks like in real time? This year, my accounts are up $1,977,000 with a 56.65% gain so far. That's not theory, that's execution. And I'm not the only one. Inside my community, Jungle just pulled in a 26% return in one day on IREN options. Mike closed Google Cash secured puts for 86% profit. Brandon locked in 80% on AVGO, de-risked and freed up capital. And Wreaks Havoc locked in $3,431 of profit on PLTU. These aren't cherry-picked. They're just disciplined, because inside my Patreon, you get real-time trade alerts, every entry, every exit, every reason, daily market breakdowns, only what matters, my daily hot stocks, the ones I'm watching, and access to the most committed data-first investor community I've ever seen. It's only $30 a month. Instead of blowing that on bullshit, put $30 into something that actually makes you better. If it doesn't 3x your investment in yourself, cancel anytime. No questions, no pressure. Most people scroll past. Some people execute. But if you've been looking for the kind of results you see in my Patreon, this is your window. Because whether you're in the buy the calm or buy the fear camp, the next move is yours.